What's up, Money Minds, and welcome back to Market Briefs Video Edition. Today is November 18th, and here's some business and financial news you can finally use. Yesterday was a massive shakeup in both the sports world and the crypto world. In case you missed it, the Staples Center is about to get a new name. This is because Crypto.com bought the naming rights to the arena for the next 2 decades, and the deal cost around $700 million. And it's one of the biggest deals in naming rights history. Staples has spent around $116 million since 1999 and has held the naming rights since then. And there have been a lot of massive deals in naming rights for stadiums recently. Just in September, Intuit bought the naming rights to the Clippers Arena for around $500 million. In addition, Chase now owns the naming rights to the Golden State Warriors Arena, and they bought the naming rights for around $300 million. But those are all traditional companies. Now we've got a crypto company taking over the naming rights of a major arena. So it looks like day by day, cryptocurrency is starting to become a much bigger deal in our society. And that's a big deal because cryptocurrency has exploded over the last 2 years. But before we break all of this down, my name is Nate from Minority Mindset News, and if you like this video, make sure to smash that thumbs up button below and hit that notification bell too. That way YouTube shows our videos to way more money minds around the world, and we can keep making videos just like this one. In November of 2021, Bitcoin hit an all-time high of around $67,000 per coin. In addition, Ether or Ethereum also hit a new record high of just under $5,000 per one coin. And Crypto.com buying the naming rights to the stadium is a big deal. It's a big deal because a lot of people are now going to have more exposure to cryptocurrency. They're going to see Crypto.com every single time they tune in for a game or watch an award ceremony, and they're going to wonder what exactly it is. But I'm here to answer that question for you, so you don't need to go out and look it up any further. Crypto.com is a cryptocurrency brokerage. It's also an educational platform for cryptocurrency in general. It is very similar to some other crypto trading platforms like Coinbase and Gemini. Crypto.com is huge. I mean, if they've got the capital in order to buy the naming rights to the former Staples Center, well, then they're also going to put a massive footprint in the cryptocurrency space. And what Crypto.com does is act as a middleman between you and cryptocurrency markets. They allow you to buy, sell, and hold cryptocurrency on their exchange. It functions a lot like a stock market broker, except for instead of trading stocks and other assets, you're trading cryptocurrencies. And Crypto.com allows you to hold, buy, and sell over 150 different cryptos. Little by little, cryptocurrency is starting to get bigger. But where exactly did all of this boom come from? Well, cryptocurrency has been around for a long time now. I mean, it hasn't been around since the traditional stock or real estate market, but it's been around for well over a decade. The first major decentralized cryptocurrency hit the world in 2009, and it was called Bitcoin. Now, obviously, we know that Bitcoin is huge today. Right now, one Bitcoin is trading at around $58,000 per one coin. However, when it first started, Bitcoin was not really that big of a deal. I think one of the reasons why Bitcoin wasn't a massive deal when it first started was, well, nobody really knew about it. And not only that, the technology behind Bitcoin wasn't really that advanced. Cryptos had to start somewhere, and Bitcoin was really the first one to do that. Bitcoin didn't really take off though until 1 year after it was created. Probably heard of Bitcoin Pizza Day, and if you haven't, here is a very brief recap for you. Back in 2010, someone managed to buy around 10 Papa John's pizzas for around 10,000 Bitcoin. But it was a lot bigger than that. You see, this was the first ever major transaction that we know of that was done using Bitcoin. And 10,000 Bitcoin today would equate to around $600 million. Those are some expensive pizzas. But like I said, they had to start somewhere, and Bitcoin kind of broke the mold for these cryptocurrencies. Now, one of the reasons why people like crypto so much is because cryptocurrency is decentralized. Our traditional dollars are controlled by a central agency. In this case, it is the United States Treasury, and the Federal Reserve decides how much money we can print on a yearly basis. So if the United States government and the Federal Reserve decides that we need $1 trillion, well, then they go and print that money. You don't really have a say in that, and it matters because you use those dollars every single day. This means that our traditional dollars are almost always going to become victims to inflation. But cryptocurrencies act more like commodities. There is a limited supply of Bitcoins that can be created. It's around 21 million. Once that limit is reached, there cannot be any more Bitcoins. This is because of the constraints that the blockchain technology has. Basically, one of the biggest problems with inflation is as more money is printed, the value of your money goes down. This means the buying power goes down because you can't buy all the same things as you could before. Prices are going to continue to rise because inflation is going up. As more money is printed, more people have more money, which means more people spend money, which means companies also have to produce more, and that doesn't come cheap. So they have to raise their prices too, which means you are going to have to pay more for the same goods and services, even though those same goods and services aren't really changing much. Bitcoin and other cryptocurrencies subvert that. Once the maximum amount of Bitcoins have been created, if you own a certain amount of Bitcoins, your stake in Bitcoin will never change. Now, the value of Bitcoin might decrease, but your stake will never change, which is totally opposite to what happens with your US dollars. Think of it this way. If there are $100 and only $100 in circulation throughout the United States, and you have one of those dollars, well, then you have 1% of all of the dollars available. You currently hold 1% of all of the wealth. However, if the Federal Reserve decides that we need an additional $100, well, now there is $200 available in the United States. Your $1 is not worth the same as it was before, simply because there are more dollars now. So before you owned 1%, but now you only own 0.5%. In order to get back up to that 1%, you have to have $2. And this goes on and on and on until the federal government prints trillions upon trillions of dollars. So a lot of cryptocurrency investors believe that crypto is a way to protect yourself against this rising inflation because it is naturally deflationary, meaning that its value will most likely rise, but its buying power will not drop. In addition, cryptocurrencies like Bitcoin also solve a lot of real-world problems. One of the biggest is the exchange problem that we have. If you want to use your US dollars in another country, well, you can't exactly go to London or France or even Germany and hand them a US dollar. Instead, you need to exchange your money for the current currency that is being used in that country. And with this, things can get complicated because now we have to take exchange rates into account. $1 in the United States might not be worth the same as €1 in another country. So you might be getting less money. However, Bitcoin kind of solves that problem. One Bitcoin is going to be the same value in all different parts of the world. So when you exchange your Bitcoins for that country's currency, you will get an equal amount of that country's currency for your Bitcoin. You don't have to worry about an exchange rate. It's all the same. That means you can use your Bitcoins anywhere throughout the world. So as long as you have Bitcoins in your wallet, you can use your money more effectively around the world. And ever since 2009 and 2010, Bitcoin has exploded, and we now see the value at around $58,000 per one coin. Over the last 2 years or so, though, it has taken off by record rates. In January of 2020, one Bitcoin would cost you around $7,300. The value of one Bitcoin has grown 8 times that since the early parts of 2020. One of the biggest reasons for this is because the world is in such uncertainty right now, especially when it comes to their finances. Like I said before, Bitcoin acts more like a commodity. Traditional commodities would be things like energy, oil and gas, and then also some precious metals. Gold and silver are also commodities. So what exactly do commodities have to do with anything? Well, commodities protect investors from inflation. They store real value when our traditional dollars begin to lose value, because a pound of gold or one Bitcoin is going to be the same all throughout the world. This is because the resource to create it is finite. There's only so much gold in the world, and there's only so many Bitcoins. However, our US dollars are infinite. The United States government and the Federal Reserve can print as many as they want. So when people start to lose faith in the US dollar, whether it be inflation or some other means, people turn to commodities. That way, if you have a pound of gold or 1 Bitcoin, you can use that and sell it to get liquid cash. You can get actual cash on hand that you can use if the economy goes into a recession or depression. So when the 2020 pandemic started, a lot of people were uncertain with what was going to go on in America, and the rest of the world for that matter. People wanted to know that their money was protected and that they were still going to be making money. So investors turned to this new digital asset, cryptocurrency. And the price of Bitcoin and other cryptocurrencies continued to rise over the last 2 years or so. And Bitcoin specifically has improved by around 225% over the last year. Not only that, but technology has boomed in the United States and the rest of the world over the last 2 years. One of the biggest reasons why crypto may be so popular right now is because people are starting to turn more to paying online and using digital assets. As the world was in lockdown, people were still buying things. They were buying things using their online money. Now, this was real world dollars that they were spending, but they were doing so online. So people are starting to see that that may become the trend for all money in the future. And technology in general has boomed as well. We've seen major updates to the blockchains of Ethereum and Bitcoin over the last 2 years, improving them for both security and efficiency. That means technology behind Bitcoin and Ethereum and some of these other cryptocurrencies is improving, and they're starting to become bigger and a lot more prominent in the finance space. And it also helped that big names like Elon Musk and Mark Cuban started to push cryptocurrency investments. They shared that they were big believers in cryptocurrency, and it seemed that a ton of other businesses followed suit. Tesla in particular stated that you would soon be able to buy its vehicles with Bitcoin. Business after business was starting to get in on the cryptocurrency game. They were buying Bitcoins. They were allowing people to hold Bitcoins, like some banks were doing, and you could purchase items with cryptocurrency. And in 2021, the first Bitcoin ETF launched on Wall Street, meaning that investors could now invest in an ETF that tracked Bitcoin futures. This is a huge step because the stock market and the cryptocurrency exchanges were pretty much separate. But day after day, they're starting to get much closer. And even now, there's 2 Bitcoin ETFs. There's the ProShares ETF, which was the first Bitcoin ETF, and now there's a Van Eck ETF. So we got on a little bit of a tangent there, but what does this all have to do with Crypto.com buying the naming rights to the former Staples Arena? Well, one of the biggest problems facing cryptocurrencies is adoption. Right now, we have some businesses around the world that are accepting Bitcoins. We have some governments, like El Salvador, who are promoting Bitcoin alongside their own currency. However, worldwide though, cryptocurrency is still not widely used. As it gets more visibility, a lot more people are going to start investing in cryptocurrency. And the more people that invest in cryptocurrency, the more adoption it will eventually get. Companies want to make money, and if the money is in cryptocurrency, then they're going to allow you to start making purchases with your Bitcoin or crypto. The first big hurdle that people, companies, and exchanges are going to have to overcome, though, is regulations from the government. Specifically, countries like China have completely banned cryptocurrency transactions within its borders. And to be honest with you, there's nothing really stopping a country from doing that. If they don't like cryptocurrency, then yeah, they can stop it. However, the bigger issue is how governments will start to regulate the crypto markets in general. It's one thing to outright ban crypto, it's another to regulate them. Regulating them essentially means that you're accepting them, but you're also going to start watching them a lot more heavily. We see this with the stock market with the SEC. Eventually, it's likely that we'll have a commission set up for cryptocurrencies, just like the Securities and Exchange Commissions for the stock market. And not to mention that the US government is going to find every single way that it can to tax cryptos like it does with other assets and your money. So that is one of the biggest challenges that cryptocurrency faces, but eventually that's going to work itself out, because if cryptocurrency stays on its current path, well, more people are going to start investing in it. And if we see big companies like Crypto.com start to buy more naming rights, start to get their promotions more out there, then people are going to get more exposed to cryptocurrency in general, and they're going to be curious. The other big problem that cryptocurrency faces is the scams and hackers and the fact that anyone can create a cryptocurrency. Because all of the blockchain technology is completely transparent, anybody can take the formula that Bitcoin or Ethereum has created and basically modify it to create their own crypto. In 2021, we saw this a lot with the development of meme coins. Earlier in this video, I talked about how Bitcoin and other cryptocurrencies essentially solve real-world problems. They have inherent value because there's only so many of them. However, Dogecoin and Shiba Inu, which are meme coins, are essentially only created to mock cryptocurrency in general. The problem is we have thousands, if not millions of people around the world investing in these meme coins that don't really do anything. This has the potential for a lot of investors to lose a lot of money because these coins aren't really valued at a lot. They're basically like investing in penny stocks. A penny stock is an asset or a stock that is valued at about $1 or less. So there is a huge possibility for some major gains. You can invest $100 into a penny stock and own hundreds, if not thousands of shares. Same with Dogecoin and Shiba Inu. Because the values are only worth a few cents, you can invest thousands of dollars, but you can also lose thousands of dollars very quickly. And not to mention crypto scams and hackers. We have seen billions of dollars in crypto completely stolen and wiped off of exchanges because these exchanges aren't really regulated by the US government like some other brokerages are. So if investing in cryptocurrency wasn't risky enough, you also have to worry about hackers. But scams also exist too. And because anyone can create a cryptocurrency, that means anyone can scam someone else out of their hard-earned money. In 2021, we saw the Squid Game cryptocurrency launch. The coin was based off of the Netflix show Squid Game. Now this was kind of a unique example because the coin was tied to a game. It was basically a recreation of what happened in the Squid Game show. But in order for people to play this game, they'd have to invest in the coin. More and more people started to play the game, and the value of a Squid coin went up to around $2,800 per coin. However, crypto experts were saying that this was a massive scam because people could not actually get any money from this investment. And they weren't actually holding coins here. All of the money was going onto an exchange, and eventually the people that created the coin and this fake exchange went off and ran off with the money, which was valued at several million dollars. And to be honest, there's not really much stopping this from happening again. So there are a lot of pros with cryptocurrency. There are also a lot of cons, but the bottom line is this. If you are interested in cryptocurrency, you have to understand that markets kind of work in cycles. When markets are overhyped for no reason, there is a lot of greed going on. That means there's a lot of bad investments that are being made. So eventually things are going to crash because these bad investments can't last forever. Bad investments would be like all of these scams and fake coins like meme coins that are hitting the market. That could likely lead to a crash in cryptocurrencies because a lot of investors are putting their money behind it, but there's no real value in them. Once the market eventually crashes though, all that will be left is the good investments, investments that experts are truly getting behind, like Bitcoin and Ethereum. So if you're looking to be a cryptocurrency investor, know what you're buying and know the value behind it. Because if you don't, you might end up losing some serious moolah. So always do your due diligence when investing in any asset, whether that's real estate, stocks, and now cryptocurrency. Always do your research and do what is right by you. Never blindly listen to people on the internet. That includes me here. Because if you don't do your research or due diligence when it comes to cryptocurrency investing or any type of investing for that matter, you may get rich for a day, but you're most likely making someone else rich for a lifetime. But now I want to hear from you on this issue. What do you think about Crypto.com buying the naming rights to the former Staples Arena? Is this a step in the right direction for cryptocurrencies and the crypto space in general, or would you prefer cryptocurrencies to be a little less generalized and more niche? Whatever your thoughts are, leave a comment below before you go. But that is it for today's Market Briefs video breakdown. Thank you so much for watching. If you like this video, make sure to hit that subscribe button below. Keep hustling, money minds, and I'll see you all in the next one.